I don't think it's unreasonable at all to say, 3,000 gold by the end of the year. By that metric, I think that it should be around 10,000. I'll just say I've been waiting for what's happening right now for a very long time.
Hello, everybody. Silverpicker here, and today I have a very, very special guest with me. I have Mr. E.Z. Rinsky. He is an economist, an author, and he is going to be talking to us all about gold today. Unless you've been living under a rock, you must have seen that gold has reached record highs, and there is a lot of mystique around it. There's a lot of ins and outs about why that's happening, and today I have Mr. Rinsky here to help us demystify everything around gold. We'll also touch into silver and all sorts of other stuff. So anyway, I'm going to let Mr. Rinsky introduce himself and tell us what he's all about, and then we'll get into the meat and potatoes of the whole thing.
Yeah, thanks, Max. I'm really excited to be here. Yeah, I'm an economist. I've taught many years at City College, economics and statistics. And today I actually do a lot of fiction writing, um, and yeah, invest and kind of advise on economics. So really excited to be here.
Yes, and I have read some of Mr. Rinsky's books. They're not related to gold or into investing, but they are excellent. I'm going to have him plug some stuff at the end, so stick around. But first off, gold is at $2,400 an ounce. Back when I got into gold back in 2011, everybody was going nuts for when gold was just about to break $2,000 an ounce. And when it hit $1,800 an ounce, everyone was excited about it. And today, it's at $2,400 an ounce. Why?
Okay, so first, I think just to be, intellectually honest, the way that these things work is that the price moves, and then we kind of try to superimpose narratives on it, try to figure out why. You know, the bottom line is it's up because more people want to buy it than want to sell it. And with gold, especially because it's the kind of thing where it gets its inherent value, its moneyness, from the fact that other people consider it to be money. Uh, it's very momentum driven. And so part of the reason that it's rising right now is because it's rising. That said, there's some very compelling forces which explain why it's rising. I think a lot of them can explain this breakout. Of course, it might take 10 years for us to realize exactly which were the most important driving forces, but I can say with pretty good confidence that these are factors which are moving the gold price. So let's start with central banks. Central banks around the world, Central Bank of China, Central Bank of India, they own primarily two assets. They own uh, treasury bonds, US dollars, which they keep, it, the US kind of holds them for them in treasury bond accounts, and they own gold.
And let me just for
And
my viewers, also for myself, I'm going to ask a lot of clarifying questions because there are people on my
sure,
channel that really are just getting started into gold, just getting started into investing. So when you're talking about treasury notes, right? Basically, what you're saying, and correct me if I'm wrong, is these governments are buying bonds from the U.S., which is essentially saying they're making a loan to the U.S. government, and those loans eventually will mature, and the U.S. government will have to pay that back plus interest. That's what a treasury note is in this case. Is that right?
that's right. I would say they're not really doing it because they're trying to get interest so much as the fact that, like, because the dollar is the reserve currency of the world and most business is conducted in dollars, particularly the oil trade, they're holding those bonds because those bonds are equivalent to holding dollars and they
Gotcha.
need those dollars for global commerce.
Gotcha.
Um, yeah, that's kind of, and it's the most stable currency in the world, of course. Maybe we'll talk about
Okay.
that coming into question a little later.
Gotcha.
So anyway, these guys hold a lot of dollars. They also hold a lot of gold. They're by far the largest holders of gold in the world are these central banks. Um, why? They believe that gold is a form of money. Especially, I would say, Eastern countries, in China and Russia and India, there's a very long tradition of understanding the moneyness of gold. And we have evidence that central banks around the world have increased their buying of gold recently. And that's probably the single largest factor pushing the gold price higher. Now, the question, which your follow-up might be, is why are they buying gold? Um, if you think about the fact that most of their money is either in gold or in U.S. Treasuries, they
Mm.
might be swapping out some U.S. Treasuries now for gold. Um,
So that's something that we talk a lot about on the channel. Obviously, I'm more, I'm not an economist. I don't have the same technical chops that you or your colleagues do. But basically, from what I understand, is in times of instability, global instability, right? We've got two major front page wars. We have Russia and Ukraine. We have the Israel Hamas war, and generally, when the world feels less stable, like during COVID, during the financial crisis, et cetera, throughout all these different historical events, as things feel less stable, people go into safe haven currencies or safe haven investments like gold. So is that the same idea here?
it's part of it. I think it's a little more nuanced with central banks because I think two things are happening, which are making central banks want to own less treasuries and buy more gold. The first is that you're seeing serious inflation in the US and you're seeing crazy deficit spending from the US government. We're going deeper and deeper into debt, which ultimately means the printing of more money, the debasement of the currency. We're all experiencing it. The $10 that we have today is worth less than it was a year ago, and et cetera, et cetera. Um, and they're worried, as all of us are, that their US dollars, even if they're getting some interest on them, are potentially losing a lot of value. And they're looking at the fact that the US government just keeps borrowing more and more and more, and they're thinking, this might not be the most stable place to have our savings, especially if there's some kind of, I don't think the US government's going to default, but they might do what's kind of a default through inflation
Yeah.
by letting inflation run really hot, especially much hotter than the interest rates they're paying. And, India doesn't want to lose purchasing power any more than we do.
Yeah. So let
I
me
think
just
this,
clarify
yeah.
that for my viewers and also for myself, because this is something I heard on another podcast, another financial podcast that I was listening to. So when you say devaluing or defaulting through inflation, what you're saying essentially is that let's say the U.S. borrowed money from China 20 years ago, and the purchasing power of each $100 they borrowed was X. Now the purchasing power of that is a much less. So if the US keeps allowing inflation to rise, they're able to pay back those debts with cheaper money. So the money that they have now, even though it's still the same nominal value, meaning they're paying back $100 for $100, but the $100 they're using to pay it back buys a lot less than what they borrowed. Is that accurate?
You said it perfectly, Max. And that it might even be, of course, that even if they're paying out, it's a fixed interest rate, which they put the loan out at,
Yeah.
right? So, um, if they're letting inflation build higher than that interest rate where the loan was originally taken out, then yeah, they're not really defaulting, but they're going to get to pay you back in much cheaper currency. Yeah, well put. The other reason why I think, and especially like right now, we've seen this spike in central bank buying is a little crazy. Um, and it might sound conspiratorial, but I think it's pretty legit. Um, when the Russia-Ukraine war broke out, you might, and your audience might remember headlines about freezing Russian assets. So what that means, so Russia, just like other banks, has a bunch of US treasuries, which basically the US holds for them like a bank. And so when the war broke out, to punish Russia, they're saying you can't access that money that you are keeping with us.
Mm-hmm.
Okay, that in itself is a little crazy, right? I'm not defending Russia. I think, Putin is acting irresponsibly at best. But to say, hey, we're the banker and you can't access your checking account is kind of scary for other members of the bank. Now, what happened, I think it was about a month ago, maybe it's 2 months ago, which is actually about 100 times crazier than that. Congress and President Biden passed a law which allowed them to take $6 billion of Russian assets and give them to Ukraine.
Huh. So you're saying that
Yeah,
basically one of the factors that these central banks of these other countries that are not necessarily enemies of the US, but are not, that are certainly rivals to the US, let's say China, we're huge trade partners. I think calling them enemies would be a huge mistake, but certainly rivals.
right.
They're saying, well, if we do something that the US doesn't like and we do something bad enough that the US doesn't like, they're not only going to freeze our assets, or they're going to actually hand them over to our enemies. And they're
They
saying,
could take them.
yeah, or take, or
Right.
whatever it is. They're saying our money is not safe in these treasury notes or in whatever other investments they have in the US. So they say, okay, we're going to start diversifying and essentially saying we don't want to be beholden to the US or dependent on the US.
Bingo. Bingo. And again, this is not a statement about what Russia's doing. I think ethically, helping out Ukraine is totally valid. But the precedent that it sets of saying, because we're supposed to be your reserve asset, you're supposed to trust us to be the world's banker. And I think China's saying exactly what you're saying. They're saying we would rather hold gold, which has no counterparty risk, than be holding US treasuries. And China has so many US treasuries that when they shift even a very small amount of their holdings to gold, that's a lot of gold buying.
So gold, as we know, is used in all sorts of industrial applications. It's used in every single electronic device that we have, and the world is constantly producing more and more and more. And the recovery of that, even though there are companies that do, scrap recovery from computer chips and everything, most of the gold that's used, from what I understand, is actually coming out of the ground. It's not recovered gold. So it sounds like actual industrial and practical use of gold doesn't have much of an effect on the market, and it's really more about what is the most stable money that we have access to, and it's more about political manipulations than actual utility of the asset. Is that right?
Yeah, 100%. For me and you, I want to own the same money that the central banks are saying is money.
That's a very, very good point. I think I'm going to probably clip that to a YouTube short. That is a very good point. I've never heard it like that, but absolutely. Okay, so that's a good sense of sort of why gold's had this rally.
Can I say, by the way,
Yeah.
Max, that's one force. I think we could talk about others as well.
So,
There are like,
yeah, in short, what are some of the other ones? And then I want to ask you another question about where gold is going.
sure. So, as you said, political risk, a flight to safety. I think what's really happening there is people are saying this geopolitical risk uh, can change the way that U.S. handles the dollar. Maybe it'll increase defense spending, which again is another way of sort of diluting dollars, which makes people want to hold gold. And um, the but the real big one is the rate of inflation in the U.S. versus interest rates in the U.S. Um, and we can talk about that more maybe on a later podcast because that's a whole kind of conversation.
Yeah. So I think we have a sense at least of like what the main factors are and why gold has had this rally. So where is gold going? I mean, I've seen so many channels over the years, and one of the things that I've prided myself on about my YouTube channel is that I'm not an extremist. I don't, tell everybody, get rid of all your US currency and only buy gold and you got to bury it in your bunker. I'm not an extremist. I do believe that everybody should own gold and silver and that there's a lot of value to investing in precious metals and having a diversified portfolio, but a diversified portfolio. But in all these other channels over the years, I remember in like 2011, 2012, people saying gold was going to go to $10,000 and silver was going to go to $100 or $200. And I remember I would always ask them why, and they never had a good answer. So my first question is, where do you see gold going? Is there like an upper limit based on just like the math, like the economics of it? And what is that upper limit? Where do you see it going? And is there any, I guess, like data-based, a data-based answer that you can give that will sort of clue us into where gold may be going over the next, let's say, short term, few months to the next year to the next decade?
Yeah. Um, so of course I don't have a crystal ball. I will say that I'm putting my money where my mouth is and investing very heavily in gold and gold related assets because I think that these forces which are driving gold higher are not finished. I think they're gonna China's got a lot of US treasuries to convert to gold. I don't think that they're done yet. So if that is really the driver of this, you know, there's no reason why this should stop at all. Um, in terms of, and I don't think it's unreasonable at all to say 3,000 gold by the end of the year.
Okay.
I don't think that's unreasonable at all. But to your point, the best kind of way of saying what should gold be. Um, there's an anecdote that an ounce of gold has always been able to buy a men's suit for thousands of years.
Mm.
Um, I'd say that's maybe roughly true now.
It's a nice suit.
Maybe the
You can
more
get a nice
important
suit now for
metric,
an ounce of gold.
yeah, right, right. Probably the more interesting metric is comparing gold to the money supply. So how many dollars are out there, right, and how many ounces of gold are out there. Um, if it's sort of like if gold keeps its purchasing power relative to the value of dollars, where should it be? By that by that metric, I think that it should be around 10,000 to have the same value in dollars that it's had historically since we went off the gold standard in the 70s.
So that's very interesting. And my question then would be, okay, so you're saying that economically, in terms of like economic laws or the way that money should work and the way that value should work, et cetera, it's not crazy to think that gold could be a $10,000 asset. But because the language we're using right now is saying an ounce of gold could be $10,000, it means we're always comparing it to dollars because that's what we're used to sort of measuring purchasing power in, which makes me think that the US government is not going to want gold to reach $10,000 to be I guess, a competitor, like a competitive currency almost. So I would assume that they would try and fight that in various ways. Is that accurate, or can they do that even? Hold up. Before Mr. Rinsky answers that next question, I'd like to thank the sponsor of today's video, Rua Gold. Rua Gold is an emerging gold explorer in New Zealand with 2 highly prospective land packages. Now, obviously, since you're watching this video, you understand that gold is having a serious bull run right now, and therefore, most gold mining companies would likely be very hot, right? So what makes Rua different? Well, there are a lot of things to like about Rua, but it's not one specific thing that makes this company so exciting, but rather the perfect storm of factors, the who, what, when, where, why, and how, that all add up to more than the sum of their parts. Let's start with the where. New Zealand is one of the best places on Earth to have a gold mine. Why? Because it is one of the most gold-rich regions on planet Earth, but it's also a first world country. That is critical to operating a safe and efficient mining operation. On top of that, for decades, the New Zealand government was very hesitant to promote any business that had environmental impacts. But recently, a new, more capitalistic-focused government was elected that is significantly friendlier to mining operations. You can see the perfect storm already starting to brew, right? But you need more than just good conditions. A good location and the support of government is not enough on its own. You need the who to respond. And Rua has an incredible who. They have an incredible crack team of industry veterans, both on the business side and on the science and engineering side. I mean, just look at the board and management team. Experience in leading world-class mining companies on 3 continents. They've done it all before, and now they're poised to do it again with Rua. And they really, really believe in the company. The CEO, Robert Eckford, left a very cushy job, making over $500,000 a year as the CFO and head of finance of another mining company called Aris Mining. He left that company to come lead Rua, where his base salary is significantly lower, but his equity is higher. He has absolutely put his money where his mouth is, buying over 1.2 million shares on the market in the last month. And on the board side, the chairman is a very successful mining tycoon, and he himself is the largest Rua shareholder. The team fully believes in this mission. Now you know the where and the who, and of course the why is obvious, right? I mean, why would somebody open up a gold mine? Maybe to make a profit like all successful companies? But what about the what? how, and when. The what seems obvious. It's gold, right? Duh. But the gold in these mines is not just ordinary run-of-the-mill gold. It is extremely high-grade gold. I mean, look at the world averages. The world averages are about 1 gram per ton. And look at the historical production at Reefton, Rua's South Island project. 24.5 grams per ton. This is unreal. But it's actually the how, to me, that's the most exciting part of the Rua opportunity. Because of the past New Zealand government policies, virtually all gold mining in the country has been done using very old-fashioned mining techniques. Think like the Wild West, doing things by hand. Now, however, modern 21st century high-tech mining methods can be used. This is game-changing, because past miners in the region have barely scratched the surface. Literally. I mean, look at all that virgin territory at depth that Rua has access to. And they have the capabilities to get there. Now all that's left is the when. And obviously, the when is now. And it's not just because the price of gold is well on the rise, which makes any mining operation more profitable by definition, but rather because all of the work that Rua has done in the past. Before Rua went public, it was a private company for 4 years. It did all of its operational setup, drilling, testing, etc. before even selling a single share to the public. That means all of the preparatory risk was taken on them and their private investors and not on you or other potential people who want to invest in the stock. This, of course, is not to say that there is no risk. I should give my usual disclaimer that I am not a financial advisor and that this discussion of Rua Gold should not be taken as financial advice. I nor anyone in my family is a shareholder of Rua, so I do not stand to benefit financially from you buying or not buying the stock. I'm just a YouTuber that is fascinated by precious metals and wanted to share the story of a really promising mining company. You gotta do your own research and not rely on any single source, even if it's mine. But if you do want to invest, there are links below for more information. And for my Canadian viewers, the stock ticker is RUA, R-U-A, and for us Americans, it's NZAUF. Thank you to Rua and for their commitment to educating the public about the gold industry by sponsoring today's video. Now, back to Mr. Rinsky.
First of all, I like the way that you framed it. When I'm talking about gold going to $10,000, it doesn't mean that gold's increasing in value, right? The whole premise here is that gold's staying at the same value, the dollars are becoming worthless. And I also say 10,000 sounds insane, but if you look at the way gold has moved historically, like it just triples or quadruples in the span of a year, and then it reaches a point where it sits around there for 10 years, 20 years, and everyone's like, okay, this is the reasonable rate of gold, and then it triples or quadruples again. It does things which, like, looking back, blew our minds every time. It's an interesting point about how the U.S. government feels about that. On one hand, it might scare them as a signal to the world that their dollars are losing value if gold is ramping up. On the other hand, they own a ton of gold.
Yeah. Fort Knox, baby.
There's like, in a sense, when gold goes up, it kind of reduces their liabilities in a sense, because that gold, which is an asset for them, is appreciating. So in a sense, it's kind of getting them out of debt a little bit, right? You've heard that kind of crazy idea about they could mint $1 trillion coin.
You're saying no,
right? To kind of get out of debt. Yeah, there's this. It's really nonsense. But they're saying, oh, the U.S. is so deeply in debt. What they could do is they could print $1 trillion coin, say this is a nominal value of $1 trillion, give it to the U.S. Treasury. It goes in their balance sheet. Hey, we just got $1 trillion out of debt.
Okay.
Right. And so that's kind of ridiculous. But gold appreciating is kind of another way of doing that.
How'd that work out for Zimbabwe?
Right, exactly. It would the message you would send about like where they are is like, I don't know. Actually, it's actually very interesting because implicit in your question is the idea that the U.S. Fed and Treasury could do something about it. What's interesting is that the gold market, I think, is really shifting to the east. I think the Chinese gold exchange, the Shanghai Gold Exchange, we've got the COMEX, which is like a paper market. People trade futures. They rarely take delivery on it. In Shanghai, people buy gold and they take the gold.
Well, wasn't that the whole issue a few months ago with the oil, like the mini oil crisis, where like all these paper traders of oil were actually being forced essentially to like take delivery of the actual oil, and then they were like, well, what the I'm a guy in an office on Wall Street, what am I going to do with a tanker? I don't have a tanker full of oil. Wasn't there something around like that?
I think you're thinking about the thing during COVID in
Yes.
2020 where oil went to like negative $40 a barrel
Yes. Yes.
because people were trying to unload it because they didn't want to actually take delivery. By the way, I heard a story about this family who had like they were a wealthy family. They had a huge estate and they took delivery of tens of millions of barrels of oil, just stacked them up, and it was probably the best investment that everyone was. They got
They got
paid to
paid to
take
take it.
delivery,
That's crazy.
right? And then they sold them.
Is this apocrypha or is this like a real confirmed story?
You know what? I can't remember who told me, so let's take it as apocrypha.
Okay.
Um, somebody's probably smart enough to do that. Um, yeah, like the COMEX is like it's a paper market. A lot of people talk about fraud on it. I don't know, and bank manipulation. But in Shanghai, when you trade gold there, you're really trading gold. And people in Shanghai Chinese are buying a lot of gold. Citizens are buying it in addition to the central bank. They really value gold as money. China's having a lot of economic problems. I think they're flooding to buy it. And when they buy it, um, the gold price in Shanghai can only be so different than the gold price in the States, right? Because at some point
Yeah.
there's an
Yeah.
arbitrage. And so I don't even know to what extent the US government could suppress the price of gold even if they wanted to.
Interesting. So, okay, so we talked a lot about gold, but its younger brother, silver, is also on the rise. It's also been ripping, and it's at about $30 an ounce as of the recording. And if I remember correctly, like even as recently as like maybe 2 years ago, like maybe towards the end of COVID, I think silver was trading at half that, like even 12, 13, $14 in the last few years. So it's come back up, and I think it's settled in the, 18 to like $25 range over the last like 2 years maybe. But hitting $30 is a pretty big deal. So tell us a little bit about silver and where you think silver is going. And also maybe why it hasn't ripped as quickly or as powerfully as gold.
Since I've been trading, uh, $30 has been like kind of a mythical, very important psychological upper bound on silver. It briefly crossed it during some COVID mayhem, but didn't stay there for long. Just today, as we're recording, we saw a 31 print, which is like that's the first time in a long time. Um, yeah, and it's huge. It's like I think the way silver usually works is it's much more speculative than gold. Look, central banks don't buy silver; they buy gold. When it comes down to it, if you and I wanted, to store and protect our wealth, we would probably buy gold just because it's easier to store, it's smaller. Silver, that's why it's a lot more speculative. What kind of happens typically, I think, is gold price rises, and then at some point people are like, gold's getting expensive, but if I want to have a store of value, silver's been basically the same thing, more or less, for thousands of years. It's really cheap compared to gold. Gold has moved, silver hasn't. Let me pile into silver. Um, it also has some industrial uses like solar panels and stuff like that, but it doesn't have the same moneyness that gold does, right? Central banks don't say silver is money,
Mm-hmm.
so it can go down a lot, and then when it rips, it absolutely rips. Um, typically, what I'm very bullish on silver right now because it hasn't really kept up with gold, and it usually ends up keeping up with gold to some extent. Um, but it's a much more wild west. Like gold can't go too low again because there's this constant central banking buying. Silver theoretically could drop much lower, but I think just in the last 2 days, literally, people are starting to get really excited about it. Um, I've traded through one kind of silver breakout. I think it was the summer of 2020 when you just start seeing crazy stuff like 14% up days. Uh, I this is my intuition is that if it can stay above 30 for even a day or two, 40 or 50 are very reasonable targets to get to quickly, just because its all-time high is around
Yeah.
50. Gold is now well above its all-time
Yeah.
high. 50 would be totally reasonable.
Yeah, I mean, I remember when I got into silver, when I started the Silver Picker channel, when Silver Picker was born, it was around 2011-ish, And that was, 2010, 2011, 2012, on the tail of the 2008 financial crisis was when gold and silver started to rip. And I remember gold just sort of touching that $50 mark. When I was going to garage sales, buying and selling, little bits of silver here and there, silver was in the mid 40s regularly, and people then were talking about silver going to $100 or $200. And I remember always saying, "Well, why?" And nobody was able to give me an answer, so I always said BS. But
Right.
but what you're saying is very interesting, and it makes a lot of sense. And that actually leads me to my next question, which is something I know my viewers want to understand a little better, and that is the gold silver ratio. And for those of you watching who are completely new to gold and silver, first of all, kudos to you to watching, 25 minutes into like a in-depth discussion of gold and silver and world markets. But basically, throughout history, we have tracked how the value of gold and silver together. So the gold to silver ratio is basically how many ounces of silver does it take to buy 1 ounce of gold. And the lower that number, it means generally, the more valuable or the higher the purchasing power of the silver is. So right now, from what I can tell, $2,400 gold, $30 silver, the gold silver ratio is around 80. Can you put that in a historical context? Tell us, is that high? Is that low? And how much weight should we put to the gold silver ratio? Maybe how we could use the gold silver ratio, and then what does it mean for today, and what should we actually do?
Historically, the gold silver ratio is around 50 to 70. So at 80, that means silver is relatively cheap. I think the most extreme disparity we saw was around 100 at some point, which means, again, if you're thinking of silver as like also keeping up with the dollar and keeping its purchasing power, that means it has some makeup to do. Um, on the other side, I've heard it said that like the rate at which silver and gold come out of the ground is about 10 to 1. So there's sort of a theoretical way in which a 10 to 1 price ratio makes sense. Um, and then, because silver has real industrial applications much more than gold, you could even think of a scenario where it's, more if for some reason, let's say silver panel technology becomes huge, you know, and gold is just is money, but silver is an industrial metal that we need. I think about 50% of silver use is industrial, 50% is investment. You could see it being, theoretically being lower than 10 to 1. I don't really, I think it's interesting. I don't use it as a trading tool really. There are some people who trade it. So like right now, what they might be doing is like shorting gold, longing silver as a bet that the gold silver ratio will revert to the mean around 50 to 70. Typically what happens historically is because gold moves first, the gold silver ratio gets too high. And then when silver catches up, it really catches up. And we might go to the other extreme, 30 to 1, 20 to 1. Again, that's kind of the theoretical rationale for, $100, $200 silver, but it's not a law. It's just historical context. This isn't like a physical law of the universe that it has to obey.
Okay. So, but what I can see right now basically is that if we're using past performance as any indication, it seems that silver is unusually cheap right now, and essentially, I'm not saying, and I'm not making any like hard claims to my viewers of what they should do with their money. Obviously, my disclaimer is that they should do their own research, not just accept one source, even if that source is me or you, whatever. But what the gold silver ratio is telling us right now is that if we want to capture value on precious metals, silver is the bet, because it's historically, at least, when gold rips, silver catches up and tries to get to that 50 to 70 gold ratio number. And if we're at 80 right now, there's a lot of room to get there. So you're saying you are bullish on silver, so you are buying a lot of silver right now. And how are you buying that silver? Are you buying physical? Are you buying paper? How are you buying it?
Yeah. By the way, I would just say, I think silver was at this price 20 years ago. Like by some measures, it's the cheapest material on earth. So, but your viewers should know it's riskier than gold. The upside comes with risk. Again, it doesn't have that central bank constant bid. So I am very bullish on it, but you have to have a stronger stomach to invest in it because the ups are higher, but the lows are downer. I know your channel, you guys are probably really into silver coins. That's
We
great.
are indeed.
Um, you're into coins. Um, I like physical buying. Honestly, the best thing about it is taxes.
Hmm.
If you buy them right now and then you pass them down to your kids in 30 years, and the price of silver has gone from 30 to 1,000, and they take them to the store and sell them, you don't have to pay capital gains on that. Nobody has any idea how much you, Max, paid for the coin.
Hmm.
Um, and I think that's pretty awesome. There's like very few like investments that you can have that are hard assets where you're going to enjoy that um, tax evasion. But and so I own some physical gold. I don't own much physical silver just because again it's it's a lot. It's
Yeah.
heavy. Um, I
Yeah,
I
ten
own
thousand ten
some
thousand dollars in gold is four coins. $10,000 in
right.
silver is, a whole safe basically.
Yeah. People don't, the ETFs get a lot of hate, because it's like it's paper currency. I hear that. I like the Sprott physical trusts. PSLV is the silver one. I think PHYS is the gold one. And they're like, hey, we're not paper traders. We have the silver and gold in the vault. I do trust Sprott. I think they're a very well-known name. And so if you're going to invest in ETFs, I think that's a good way to get exposure. And it's frankly, um, I think holding coins are great. If you want to have a large amount of money in silver, that's an easier way to do it than buying, you know, 50 pounds of silver.
Yeah.
And then there's the equities, which we could talk about too.
Yeah, so I mean, my viewers know that I, in the last 2 years, have shifted almost my entire investment stack from silver to gold. And the initial reason was entirely logistical. It was not because I believed gold was going higher or until our conversation right now, I didn't even understand the central bank moneyness of gold, which has been super interesting. And I hope my viewers understand how valuable that information is. But I just did it because silver heavy, gold light, in the quantity sense. And I have kept that mostly. I have my silver coins that I have as my collectibles, my collection, my numismatic silver. But in terms of my investment, it's virtually all in gold right now. And it's also a lot easier to protect. My safety deposit box at the bank, I get to buy, the small little one. I don't need that giant one that I used to have all of my silver. I still am a sucker for physical precious metals, but I have during this whole craziness branched out and done some investing in some gold and silver mining stocks and some paper silver and gold as well. But I'm curious to hear your thoughts also about just some alternatives to gold, because it wouldn't be a conversation about precious metals and gold if we didn't bring Bitcoin into the conversation. So I have been holding Bitcoin since I think 2016-ish. So I didn't get in super
Good for
early.
you.
Thank you. I didn't get in super early. I didn't get it in when it was, $50 a coin, but I did get in to the point where I made a nice, I mean, I haven't sold it. I'm holding it still, but where I have a nice little profit on that. And I've done even better on Ethereum. But I'm not a huge investor in crypto anymore, meaning I got into it, I've bought a bunch, I've held it, but I haven't been buying consistently like I do with precious metals or even stocks and other traditional investments. So I'm curious to hear what your thoughts are about Bitcoin, other crypto, and specifically in its relation as like an alternative to gold, meaning an alternative to sort of parking cash. And then also what you think about cryptocurrency as a competitor, threat, or just alternative to gold. Just tell us your thoughts on that.
Sure. So first of all, I'm not a crypto investor, so everything take it with a grain of salt. Man, I'm just a bitter old man who missed out on the investment of a lifetime. Um, yeah, I hear the Bitcoin to gold comparisons a lot. It's digital gold, it's untraceable, it's a store of value that's outside of the US dollar system. To me, the biggest difference is that central banks don't hold Bitcoin.
Yet.
right. Yeah, and look, the truth is they probably do hold some. Um, if if we find out that central banks are saying Bitcoin is money to us, I'm going to eat. I'll eat my words and probably say, you know what? Okay, like I missed the boat. Bitcoin is money. To me right now, the central banks of the world see Bitcoin as an adversary
Hmm.
more than gold. You know, you asked the question earlier about does gold threaten the central banks? Maybe, but they also hold a ton of gold. They don't hold a ton of Bitcoin. I'm sure they have some allocation,
Hmm.
but um, I think it's more likely that, and this is my big beef with Bitcoin, is the on ramps and the off ramps to it are really easy to control.
Hmm.
You know, for the
Yeah.
government, you know, if you have a wallet, then they're gonna tax it. They're gonna figure it out, and then you lose all your anonymity, which is kind of one of the big selling points of Bitcoin. So the real use case, I guess, is to me the main one is like international transfers, especially ones that you don't want the government to know about. That's a legit use case. You know, it's easier than shipping somebody gold. That's an actual use case. But like for me and you, a lot of it seems like crypto in general to me is a little bit of a solution without a problem.
Hmm.
Like we have all these cryptos, and I do think we're going to figure out at some point some really awesome use case for them. I think that there's a lot of, I see it a little bit, it's like MySpace. It's like
Yeah.
this is going to be like a really big thing. We haven't really figured out exactly how to use it yet.
Yeah.
Same for AI, by the way. Like it's totally the future. I think we have the solution now. We don't know the problem. You know, so Bitcoin, I understand the arguments. For me, it's like if you really want sound money, you go with what the central banks are buying. And if they change their tune and they say, hey, we're having an allocation of Bitcoin, then I'll eat my words.
Gotcha.
Um,
And okay, so it sounds like you think that there is, if I'm reading you right, if you want to invest in cryptocurrency, go for it, but it is purely speculative and it doesn't have the same soundness, economic soundness as gold, silver, or other traditional investments. And it is an alternative to gold in theory, but it hasn't proven itself yet. And given the average lifespan of an ordinary human being, you're saying that if you're going to invest in something, uh, and you want it to be more sound, go with what the biggest countries and superpowers are investing in, not what that TikTok guru is pushing.
yeah. And by the way, there's a company, I can't remember their name now. Maybe we can talk about it at a later podcast, which is kind of building a crypto that's backed by gold.
Mm.
I think that's a very interesting proposal.
Is it Kinesis?
Maybe that's the one.
Okay,
Yeah.
they have sponsored a couple of episodes of my show
Oh,
in the
okay.
past, so thank you to them. But yeah, it's a really interesting product they have, but it is still, I think, in the I guess experimental phases. We talked about gold, we talked about silver, we talked about some alternatives, and I want to be cognizant of our viewers' time. Right there, I'm happy. Anybody who's still watching, kudos to you again. Thank you. But I want to end on a little bit about you and your own investing strategy. So you don't have to give us actual numbers or anything, but I want to understand what your gold and silver position looks like in relation to, I guess, your net worth, right? And what other things do you invest in? You can tell us more, in percentages, the pie. You don't have to tell us, how much money you have. I was
Sure.
on. Do you know Graham Stephan? He's like a online whatever. He's like a money guy on YouTube. And I was on his show a few years ago, and like he just kind of comes out of nowhere and goes, "What's your net worth? How much money do you have?" And I'm like, "Well," and he goes, "How much money do you have? How much money do you have?" And it was just like so awkward. So I'm not putting you in that position. I'm just curious to understand for our viewers to get an idea of like what a person's portfolio should look like or could look like.
So it's obviously incredibly personal. For instance, even something as simple as how much silver you have versus gold, if you're looking to take big risks and kind of shoot for the moon, you'll err on the side of silver. If you're, just kind of trying to maintain your spending power, then, you'll err on the side of gold. Um, at this moment, I'm extremely bullish on silver and gold mining stocks. We didn't talk about those, but they're priced as if gold is around 1700 and not 2400.
Hmm.
I think they're some of the cheapest assets on earth. Um, and they're moving now, but they're nowhere close to where they should be given the price of gold, in my opinion. So I have probably about 25% of my money is in some form of gold or silver type um, asset. Now that, look, if gold goes to 5,000, silver goes to 200, um, I'm going to trim that. I'm going to take some profits. That I already didn't start out with 25%. I've had a pretty good run, and it's grown into 25%.
Heck yeah.
So I'm not necessarily advocating that you take 25% now and do that. I'm very, very interested in uranium. I think that the thesis there is incredibly compelling. Um, Energy right now in general is very interesting to me. I think that we're headed for I think energy, in addition to silver, is probably like the cheapest thing on earth right now compared to where it should be. So uranium, I'm very interested in. We can maybe talk about that on another
Yeah.
podcast. I think the thesis there is about as good as, unless I'm missing something, this is like the best opportunity that people like you and me will have to retire much earlier. Um, and there's a few tech stocks I really like, and cash and bonds are a tricky one. They're paying out 5% now, but
Yeah.
eh, it's like if inflation is really going to be here to stay, that's you don't want to be anywhere close to bonds. But
Gotcha. Well, this
yeah,
has been very, very interesting. I mean, just as like a little recap to the viewers and also for myself to sort of digest all of this, we talked about why gold is where it's at. And it sounds like part of it has to do with the turmoil in the world, but a bigger part has to do with the U.S. essentially just overspending and devaluing the dollar and allowing inflation to run rampant, which is forcing the central banks of other countries to get a little gun shy of putting more money into dollars and want to put it into gold instead. And sort of just the basic supply and demand laws of economics is sort of pushing the gold up, and all the ordinary investors like us can sort of ride those coattails. We talked about silver, and essentially you said that it's not unreasonable for gold to go at the end of this year to 3,000, but based on just like sort of the math of it, the economics of it, it could theoretically go to $10,000. I'm not holding you to that, but it's not insane to say that. Um, and then when it comes to silver, based on the gold silver ratio, silver seems to be undervalued compared to historical values compared to gold. And there's a real opportunity for anybody to invest in both gold and silver, but silver, it seems like bigger risk, but potentially bigger reward. We talked a little bit about Bitcoin, and it sounds like you think that there could be. You're not ruling out the idea that Bitcoin will change the world and change the way we use money and look at money in the future, but you don't really see it as a serious competitor to gold. And then in terms of what we can actually do, it sounds like first of all, like me, you're not an extremist. You have a balanced portfolio with lots of different types of investments in it. And basically, if we want to jump in headfirst into the world of precious metals, we can buy physical, we can buy ETFs, or we can buy mining companies, i.e., other companies that are directly related to precious metals but aren't the actual precious metals themselves. Is that a good summary of everything we've talked about?
perfect, Max. Nailed it.
Is there anything else you want to leave my viewers with and about gold and silver? And then I want you to plug anything that you're working on. I don't know if you guys can see behind me, but I actually do have a copy of one of Easy's books. You can see that. That's The Binding
Wow.
by Easy Rinsky. I'm still waiting. When we see each other in person, I want you to inscribe that for me. But I have read
Sure.
everything that you have written, and I love it. I absolutely love it. But anyway, what can you leave my viewers with about gold and silver, if anything else? And then tell me what you're working on personally, and where they can find you.
Yeah, the last word about gold and silver, I'll just say I've been waiting for what's happening right now for a very long time. I've been wrong. Well, I've been early, which is the same thing as being wrong, for many, many years.
Mm-hmm.
I think I think that its time has come. Um, so I hope I think that this is an opportunity which only comes around once every 10 or 20 years.
Heck yeah. So tell us now about where my viewers can find more Easy Rinsky.
Sure. You can just check out my website, easyrinsky.com. I have my novels up there. Again, they're not related to gold and silver. They're not even related to um, they're not even related to economics. I have two detective novels. I have one that's kind of a dystopian novel. I'm working on something else now. I think it's too early to spoil
Okay.
it for the whole silver picker crowd, maybe at a later
Yeah.
date. But yeah, I think, look, I got a lot of interests. I'm sure that all your viewers have many different interests too, right?
Yes,
These aren't
for
just,
sure. Sure.
besides just gathering the coins, maybe you guys like to read,
Well, I
novels. So,
certainly do. I mean, I told you before we got on this call, I said when I read Easy's novels, the first one I read, I could not put down. I read it in two sittings. It's like 300, 400 pages, and I read it in two sittings. And then the following one I read in two sittings as well. So, and I've read the third one too. But really awesome stuff. If you like mysteries, if you like even a little touch of horror, it's kind of like. Would you agree with my assessment that it's kind of like detective noir meets horror-ish? Is that reasonable?
yeah, I mean, I think they're a little funny.
Oh, they're hilarious.
Yeah, they're kind of paranormal,
Yeah,
a little paranormal. Um, yeah, it's a little kind of sci-fi kind of aspects.
I love
I don't
them.
know.
I
I
can't wait till the next one's
Yeah,
out. Seriously.
me either.
All right, so we will end on that. Anyway, I make videos about coin collecting, precious metals investing, personal finance, and all sorts of other stuff. So if you like this video, hit the subscribe button, throw me a like, do all that YouTube stuff, and put in the comments if you want me to have Easy back on the show to answer any other questions. And put those questions down there, and I will ask him them. Anyway, I had a great time. I've got a lot more awesome stuff coming down the pike, so stay tuned. And until then, Easy Rinsky and Silver Picker out.